Good morning. Welcome to Regional Property Unplugged for another Tuesday. We have a guest today. Mark, who's our guest?
Our guest today is the infamous Matthew Valerio from Mildura Finance Limited. Or what are you? Where are you? What's the company called now? Platform Finance, Matt.
Platform Finance now, yeah. So we're still trying to keep the branding locally as Mildura Finance, but we are owned by a Sydney organisation called Platform Finance.
Ah, very good. So well, before we kick into it, I reckon we just get a bit of a tell us your resume, mate. What I know you spent a lot of time at the Bendigo Bank, and you've been in the finance industry for a long time. What's the story?
Yeah, sure. So straight out of school, 17, 18, started at the Bendigo Bank, started as a teller there part-time, worked my way up there, started lending, moved to Adelaide for 4 years with the bank, then come back, met my partner here, Lisa, and then
Lovely, Lisa.
had a chat to Peter Schroeder from MFL, who started MFL 20 years ago, and he said, come across and try out brokering for a change. And yeah, that was probably 3 years ago, and haven't looked back since. So probably been lending for about 10 to 12 years, I'd say.
It's a big show, MFL, isn't it? I don't think a lot of people realise how big MFL is, right?
Yeah, correct. So I reckon we've got about 30 staff locally. So majority of it is more asset finance based. So you're looking at your car finance, equipment finance, and we get leads in from nationwide, all over Australia. It's quite a big operation. When you look at, we probably write 400 to 500 loans a month through the office there. And then we've also got our local arm, which is a local cars and equipment, and then the local home loan arm, which is what we'll be probably focusing on mostly today, which is quite successful as well. So yeah, Pete started it up 20 years ago and still going strong.
Perfect, mate. That's awesome. So I guess why we've got Matt on today, for anyone out there that's watching the show or about to watch the show this afternoon, it's, I think the biggest issue, not the biggest issue, but one of the biggest questions that I always get regarding finance is which way to go and which bank to go to. A lot of people aren't sure where to start when it comes to getting their finance. So, there's a few options out there. You can go to your big four, your banks, or you can go to a broker. Matt, for those that are starting the journey into real estate, can you actually, I guess, give us an idea of the biggest difference between a broker like yourself and going to a bank?
All right. If you look at going to a bank, you're looking at one set of products, so one suite of products. They might have 2 or 3 different home loan types, and they may have quite strict policies. When you come to a broker, we've got 30, 40 lenders which we choose from. A prime example would be in the Sunraysia area, there's quite a lot of farming and rural zone properties. Now, there are very few banks that will actually touch that. So by coming to a broker, we'll be able to put you on the right track and get you in with the right lender straight away. So we've got the option as a broker to find a lender and tailor your needs and objectives and pick the correct lender, which is going to benefit you most.
So you've got some banks that suit certain job types, right? So I know like some clients that I've met, you might have a teacher that are better suited to a certain credit union or whatever. Is it you're finding that some people don't realise the benefits of going to a broker like yourself? After being to a bank, they go to a broker and say, okay, well, I can actually drop off a 0.5% or an extra percent because of the type of job I'm in or type of situation I'm in.
Correct, Mark. Teachers are a prime example. Teachers Mutual Credit Union, if you're a teacher, you will shave about 0.5% off, plus you'll waive pretty much all your fees as well, which is quite good. There's a number of, most lenders have professional packages as well for people in the police force, ambulance, paramedics, etc. And it's just trying to pick the right bank so that they're going to benefit most from that.
Perfect. What do you got, Shona?
I'm really taking this in because I have used a broker before, and I think it was a really, really good experience. And I guess when I was younger, I didn't know the formalities of it. I didn't know what the strategy was. So coming to a broker, it doesn't mean that you have to get a loan from a bank where you currently have a savings account in, right? So you can actually access whatever lender, how many lenders you have on your portfolio. and you don't have to set up an account. Is that true?
Correct, Shona. Yeah, that's spot on. So if you want, let's say, for example, you banked at Bank A, you could keep all your banking at Bank A and just have your home loan and maybe an offset account at a different institution. That's totally fine.
Yeah. Cool.
So some banks will have quite a good offset account and home loan package, but their transactional banking might be quite expensive or it might not meet your needs. So by all means, you can keep some stuff there and then have your home loan and stuff elsewhere.
Yeah. So the type of things that you take into account, like if that's, your fixed and your variable rates, what are the other things that you take into account for a personal circumstance?
All right. So with your fixed and variable, if you're going to go fixed, you can only pay a maximum of $10,000 extra during that fixed period each year during that fixed period. So if you're going to look at selling your house during that fixed period, I would strongly suggest to go variable. Otherwise, that there can be quite considerable break costs involved with breaking that fixed term early.
Yeah, cool.
With your variable, it's kind of your no frills home loan. So pay as much off whenever you like, redraw it out whenever you like. And so something that I've been doing quite a bit of late is actually splitting them up. So you have say 30% fixed, 70% variable. So then they can pay off the variable portion as quick as they want, but they've got the fixed rate, which is at a much lower percent.
Yeah.
And then they're saving interest in the long run there as well.
Yeah.
So what do you, is it the fixed rate drop off about 1%, or is it, what's the usual?
0.5 mark.
Okay, yeah.
0.5, 0.6, depending on where you go. Yeah.
But it adds up over time, right? So if you fix only 30% of your loan's 400,000, say if you fix 150 grand, 5%, or 0.5% over times, it's a fair saving.
You're going to save yourself a lot of money doing that. Correct.
Yeah. Especially that's a good one, because a lot of people don't know that side of it, that you can only fix part of your loan. And I think a lot of people are, you hear it out and about where people are afraid to fix a home loan just in case it goes down further, which I don't think it might. And then obviously because circumstances change, you sell, you've got to pay those breakout fees. So it's a good idea for those that are wanting to save a bit, know that they're staying at the right property, the same property for quite some time. So it's a good option.
Correct.
Yeah, for sure.
Now, Shona, just to carry on from what you asked before, some of the other things that we look at is your monthly living expenses. Okay. So the banks will want to see bank statements. Now, this can be a deal killer depending on how the bank statements are conducted.
Mm-hmm.
Let's say if we look at a credit card facility and it's been over its limit, or you've missed a couple of payments on that, or a personal loan, that can be a real killer. And sometimes you have to wait a few months, get that back on track before we can actually proceed. The other one is your bank statements where your pay goes in, so to speak, so your transactional banking. If you're going overdrawn, if you're missing direct debits and they're getting dishonored and stuff like that, banks are really against that. So really something to keep an eye on if you're planning on going for a home loan moving forward would be to make sure that the conduct on those accounts is spick and span, because the bank's going to be going through them with a fine-tooth comb.
Yeah.
What about smashed Avo, mate? Can you recommend whether people continue to get smashed avocado? Stopping people from getting a loan these days, but they do. They look at your bank statements, don't they, at it with a fine-tooth comb, making sure that you're not spending too much on general food and consumption of coffees and stuff like that, aren't they?
Correct, mate. Yeah, smashed avo, quite an expensive breakfast, but I would like to think if you are going to be budgeting for a home loan, you might stick to some toast at home. But you're right. So they will go through it quite a bit, and they'll add it all up for the month. So what I would do is I go through a list of categories with yourself. Let's say you're applying for a home loan. I'll go through that list of categories with you, and then sometimes the bank will then see what you've declared, and then they'll also have a look on the back end, and they'll say, all right, this is what you've actually spent, and then it hurt your borrowing power, so to speak. So because they might factor in that higher amount.
Yeah. So do you help people work out like how much they should borrow as opposed to how much they could borrow? Like, because, if you're going for a loan, you don't want to miss out on living, right? Like having your coffees and the smashed avo. So it's kind of like, some people will max out their loans and they've got nothing left. How do you help people determine that?
Absolutely, yeah. So what we try and work out is a plan. So we'd work out a budget, work out a plan to make sure that they can, one, afford the loan repayment, and two, live comfortably once they have to pay that loan repayment.
Yeah.
A lot of the time when I see clients, they've been paying rent, but the house they want to buy, the actual home loan repayments, once they're amortised over a 30-year loan term, are actually lower than what they're paying in rent anyway, which is quite a bonus.
Yeah.
But yeah, no, we do try and develop a strong budget there to make sure that it's one thing for the computer to say, yep, you can borrow X amount.
Yeah.
But two, they've got to be comfortable with, and it has to be within their means as well.
Yep.
On the rent scenario, Matt, you can actually calculate that as a form of genuine saving, correct? So if you've got evidence that you've been paying a rental figure per week for a certain amount of time, is it probably 2 or 3 years, or is there a particular time? You can actually use that in your calculations of, is it genuine savings they discuss there?
Correct, Mark. Yep. So basically, when you look at genuine savings is an amount of savings which needs to be held in your bank account for 90 days. So you can show that you can save that up for 90 days. All right. In place of genuine savings, 6 months to 12 months rental ledger. So from the real estate agent to show that you've been making those rental repayments during that time can substitute for that genuine savings. But obviously you still need funds to complete the purchase. So in that sense, more often than not, we see maybe a gift from a family member in place of those savings.
Okay. Oh, yeah. All right. So someone's listening. They're actually starting the idea of looking at a home, and I come across this a lot with buyers that are looking through houses. The question I always ask: have you spoken to a bank, or have you spoken to a broker? And every now and then you get that person that says that they haven't done that. Obviously, my advice is always to speak to someone first. Are you in the same boat there? You believe that that's something you should do before you go house hunting?
Absolutely, Mark. Yeah, you need to come in and see a broker and have a look at what your borrowing power is, what that's going to look like on paper before you go start looking at houses, which may be out of your reach. So you don't want to go out and find a house you really like, only to then go to a bank or a broker to find out that it's outside of your means.
Yeah, it's so disappointing.
Yeah, so I'd strongly suggest coming to see about your loan prior to going through a house. Yeah,
and getting a pre-approval first, in your opinion. Obviously, we see a lot of people in the process of getting a pre-approval, but can you explain the difference between a pre-approval and, I guess, an approval of finance? I mean, obviously, they're two different things, aren't they?
Yeah, correct. Yeah, so it is a very good idea to go for a pre-approval. All right. So even if you haven't found a property, you might be looking to build, you might be looking to buy, coming in, getting pre-approved from the bank for X amount is that pretty much says thumbs up. It's just subject to the valuation once you find the property.
Yeah.
Yeah.
Oh, yeah. So it's not a guarantee, really, is it? It's still subject to some conditions.
Correct. Yeah. So it's not an unconditional approval, a pre-approval. Yeah. But it's pretty much saying, yep, it meets the lender's policies and product, and it's just going to come down to make sure that the house is suitable and value is incorrect from the valuer.
Did they do the credit check before the pre-approval or after?
During the pre-approval process. So basically, generally, what will happen now is it'll go through a pre-assessment, and during that pre-assessment, it'll run the credit file, and they'll have a look at that to make sure that's all good.
That's cool. Good. Excellent. So people coming to you, Matt, so do they, some people, would they balk? Like, what are the fees, the extra fees to go to a broker as opposed to walking into their bank?
Great question. We don't charge any fees up front. So we don't charge any fees to the client at all. The bank pays us for introducing the loan to them. And now that's a flat fee from each bank, which is pretty much the same fee regardless of where we go. So we don't have banks where we'll try and give all the loans to for a higher return or anything like that. We don't have anything like that in place. So it really just comes down to we're the one point of contact between the client and the bank. So we act on behalf of the client, and we just try and find the best deal wherever we can. So
that's really cool. Yeah, it's cool to know. And also, do you once the loan is established, do you send people on their way, or is there some do you have communication, liaising with the clients for a little time over their loan, or what happens there?
Yeah, so generally I'll start off with 1 month post-settlement. Then, depending on how that conversation goes, I'll either go 3 or 6 months post-settlement and then probably a yearly follow-up after that. It is very important to follow up each year just to see how they're going. Sometimes they maybe 12 months down the track, they might want to put a shed on the property, so they might want to look at using some equity that they've built up and so forth. So I find it's always good to keep in contact. And they've always got my mobile as well. So if they've got any questions as we go along, they're more than welcome to call me.
It's great support, and I think it's really, really important to have that support initially, and especially if it's for first timers. I think it's fantastic.
Yeah, absolutely. Yep.
Yeah.
We don't just want to write the loan and say see you later.
I can, like, from my personal experience of my clients dealing with Matt and the guys at MFL, is the difference is it's very personalised. They'll go in, there'll be always an initial phone conversation, won't it, Matt? And then the next stage is getting him into the office and sitting down and going through everything and making sure, I guess, they feel comfortable about what they're about to do, and that's going and buying a house. So I know I always get really good feedback, and that's why I'm a strong believer in brokerage and making sure that the client is getting the best deal, and making sure that the bank is the ones that they're going to is the best for them. And the important part is that Matt doesn't get paid to put them to a particular bank. It's a flat fee. So it's a great system, I think.
Yeah, fantastic. We actually have a question here. So going back a few steps, how long does a pre-approval generally last for?
Okay. So your pre-approval could last between 3 to 6 months, depending on the bank.
Okay.
Providing your circumstances haven't changed within that time, if you haven't found a property, all we'd probably need is just some updated bank statements and updated pay slips. And then if we could just send those back in and they'd extend that on for us.
Oh, yeah, that's cool.
So the only time that can come into jeopardy is if let's say the female applicant decides to go maternity leave and have a child. So then you lose that income there. That's when the pre-approval can be in jeopardy. That's just one example. But generally, as long as circumstances haven't changed, we can just update the income, update the bank statements, and then it's right to go again.
I think, that's pretty awesome. I think it's really cool to have a broker in your back pocket just to look after you. So, I think it's a no-brainer.
I believe the same, Shona. Righto, Matt. Common reasons for declines. Obviously, someone goes in and they go through the process. They go down that line of getting finance. They buy a house. It goes through that finance application process. What do you see mostly are the main reasons for a finance decline?
Number one, as I mentioned earlier, Mark, was the bank statements, 100%. If you've had late payment fees on the personal loan, on a credit card, you've had direct debits dishonoured on your bank statements, you're going overdrawn, it's pretty much a knockout. You pretty much need 3 months good conduct before they'll revisit it. Servicing is another one. So looking at the income, sometimes clients might want to buy for X, but income will only get them to X. And especially at the moment during JobKeeper and stuff like that, the banks are assessing income a little bit differently as well. So where they might have been a bit more lenient in the past, with JobKeeper, they've been a lot more strict and maybe only using a certain percentage of certain income streams. So that does hurt us a little bit as well.
So some banks are actually saying that they won't look at someone whilst they're on JobKeeper?
What they're asking for is they're asking for the most recent payslip pre-JobKeeper. So before JobKeeper come in, they can see what that was. Now, if the JobKeeper is just topping up their wage, so they're still working the 38 hours a week or something like that, and then the JobKeeper is just paying the first $1,500 and then the employer's topping it up over that, that's generally fine. But it's when you've dropped your hours back down to equal $1,500 for the fortnight, so you're actually not working as many hours on the payslip. That's when we start to have some dramas with servicing.
Yeah. Okay. Yeah. All right. What about for those out there listening right now that are thinking of that, and we've discussed this over the last few weeks, the first homeowners grant, the building grants. Can you explain, probably in a little bit more detail than what we have in the past, how they work, what the amounts are, how long they're going to last for?
Yeah, sure. All right. So firstly, if you're buying an established house as a first-home buyer, there's no grants out there as such, but you're going to not pay any stamp duty. So on a $300,000 purchase, you might save yourself $18,000 straight off the bat, which is fantastic. When you look to build, at the moment, there's the first homeowners grant in Victoria for $20,000, and then there's one over the bridge in New South Wales, which is $10,000. On top of that, they've now brought in the $25,000 first home builder's grant, there's been quite a bit of grey area surrounding this one. The client actually has to apply for this grant themselves. But the biggest killer is you need to have a land with titles on it and a building contract by the end of December to qualify. Yeah. Otherwise, you're not going to be entitled to that grant.
And now you have to
that, Mark.
Well, I know there's a lot of people chasing land, and I know a lot of the land that is titled in Mildura at the moment in St. Razor as a whole is pretty much gone. So there's been a massive demand, and I think is it right that the application process for the finance has only recently been allowed? So everyone's buying land but haven't been able to go through that application process?
Correct. So I think the State Revenue's Office released the application forms and the application process 2 weeks ago. So they've been absolutely inundated. Prior to that, we were trying to send in pre-approvals to have that included as part of a client's deposit, but the banks weren't willing to sign off on the pre-approvals because they didn't know when the application process was going to be rolled out. So now
you can?
Yeah, correct.
So say if someone's got 30 grand, then they can add the 45 grand in as a deposit, and then you'll base the loan off that.
Correct.
Okay, that's good. And then now I believe it's 6 months. You can start the process of building within 6 months of December 31st. So most people have got till, I guess, June 30 to actually start that build process.
That's right, Mark. Correct. Just the hardest part is finding block of land with titles. I think a lot of people that I've spoken to, there's just no land around with titles because titles can take an awfully long time to come out on blocks of land.
Correct.
There you go. So I've got one more question for you, Matt. When somebody secures a loan through you, is there flexibility that you can change loans when circumstances change, or if the interest rates go up, or the fixed versus variable, like the distance between that changes? Is there flexibility there?
Absolutely, yeah. So when I do the 12 monthly review, or even if we do it 6 monthly, the first thing we'll look at is your current product, and then we'll look and see what else is out there. Let's see how we can save you some money. At the moment, there's some good refinance rebates out there. A lot of the big banks are paying $2,000 into an account just for you to refinance across. So that covers all your fees and probably leave you with $1,000 left over.
Oh, wow.
So as long as we can show that we're going to be putting the client in a better financial position, it's really a no-brainer. So yeah, refinancing is quite big. Probably 40% of my loans are refinances.
Wow. Okay.
Probably purchases, majority first-home buyers. But yeah.
That's cool. Okay.
Yeah.
We have a question from Gabby. Do low deposit home loans exist, or do you need to have the full 20% to proceed?
We can do a loan at 95, and we've got a couple of banks which will go to 98%, including lenders.
Really?
Correct. Yeah.
Wow.
Yeah. So there's a couple of banks which are still doing that. Definitely.
You are limited to postcodes though, right?
Yeah, limited. We've got lenders at the moment which are quite limited to postcodes, but with your 98%, there's a couple of lenders which will do around this area. You'd be looking more so Mildura than Redcliffs and Merbeen, I'd say, but at 98%. But each lender's got a certain amount of their loan book exposed in each place, I guess. So let's say that Commonwealth Bank might have a high percentage in Redcliffs, so then they might make it harder to lend there. So yeah, it's just depending on how exposed they are in the St. Razor area.
Yeah. Okay. Very cool. Great.
It was a very, very handy conversation I had with Matt probably 6 months ago. If anyone that hasn't looked at their current interest rate at the moment, after we had a series, it was probably late last year or the start of this year, we went through a series of interest rate reductions with the Reserve Bank. And the bank that I was going through hadn't actually passed on many of those reductions. I just, naturally you assume that if the Reserve Bank passes it on, then they were going to pass it on. I think Matt rang me up and said, mate, all you need to do is say this, 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 and this. And I reckon I dropped off nearly 1% of my interest rate, which was huge for us. So if there's one thing you get out of today, there is the ability to negotiate with a bank, isn't there? And just making the phone call and saying, I want you to do me a better deal can save you thousands and thousands. So I think it's just being having someone like Matt that you can talk to and even say, righto, well, this is my current situation. This is my current loan. I don't think I'm getting a great deal with the current bank I'm in. What options are there? Can I switch to another bank? What will it cost? What's the process? How long will it take? Because that's, I think, isn't that not the most daunting thing, Matt, is you have people that probably just can't be bothered going through the process.
Absolutely, Mark. Yeah, we try to make it as easy as possible. So in your case, that was a good one where we could have looked elsewhere, and I had to look around elsewhere to see whether you'd be better anywhere else. But in that case, ring up your own bank, tell them this is what I've been offered elsewhere. 9 times out of 10, they'll come to the party. So,
it took about 4 or 5 conversations with the guy, and he had to keep going back to his manager. But I think the confidence I had was I stuck firm with the advice that you gave me, and I ended up getting a really good deal. So they don't want to give it to you, but they
don't want to lose you either, Mark. Yeah,
they don't. That's right. That's a good point. So, one last thing, I guess, Matt. We had Justin Daniel in last week regarding insurance, etc. That sort of thing, protection insurance with your home loan. Do you guys discuss that with your clients?
Very important, Mark. Yeah. So when you're taking on a debt of this size, it's probably going to be the biggest debt you're going to take on in your lifetime. It is imperative to make sure that you are adequately protected if something were to go wrong, so that you can make these repayments. So I always have referred to people like Justin in the past. So a financial planner or someone to review your superannuation, see what type of income protection policies and insurance policies you've got within that, and also to make sure that those insurance policies adequately are going to cover you for taking on this new debt amount. Very important.
And landlord insurance is another one, yeah?
Landlord's insurance and your home and contents insurance as well, yeah. So landlord's insurance on your investment properties, yeah, absolutely.
It's a must.
Yep.
We got any more questions, Shona?
No, not so far. But if anyone has any questions that watching the replay today, just pop them in the comments and we can forward the information on to Matt. Give Matt a call if you need. If you're thinking, broker, like I need to get a broker, call Matt for sure. And if you're talking to Mark, and wondering what the process is, he'll definitely direct you in the right place as well. I think it's been a great conversation because we don't often think about brokerage. It was just like, especially when we get excited about a property, we're just like, okay, we need to go to the bank straight away. But really think about, let's go to the broker. He's got our best interests at heart, and really thinking about us as a buyer. Really, really cool conversation. Thanks for coming on, Matt.
And the key is that once you find that house, if you're not in a position to sign on that dotted line without going through that process of getting a pre-approval, it's going to be really difficult for a vendor to want to accept your loan. If you're up against competition and your competition is pre-approved, more likely they'll go down that line. So just start, even if you're not thinking of buying until the end of this year or start of next year, it's definitely a conversation that you have to start now, because you'll want to know that you can afford what you're looking at. There's nothing worse than going and seeing a beautiful home. It's unaffordable.
It's too heartbreaking.
So it can be. So, but get yourself in a position to once you find that home and it's the one you've been looking for, or the one you've dreamt of for years, then you want to be able to strike. And I think Matt's the man. You need to talk to him. He will put you in the right direction, get you a good deal, and make sure you're set once you find that house. Yeah. Great convo. Awesome. Thanks so much for coming on, Matt. Really appreciate it. If you we'll post his details on the post. So if you want to get in contact, you can do so that way. But any questions to any of us, just give us a buzz. Excellent. And next week, I think we're talking about auctions, Mark, for our Tuesday session. You want to come on for that one, Matt?
I quite like an auction. They're good fun.
Well, how's this though? We an auction at the one we had in 13th Street. Matt actually came along with his client. So that's commitment. That is commitment there. So they weren't quite successful. But so I think that's the difference. I don't think you get your bank manager coming along standing next to you at an auction. No. Auctions are something I love to do. I've got one launching this week, which hopefully we'll be able to do the actual on-site auction after these next stage lockdowns. That is a ripper, but the actual auction process is something that I think people will need to understand. It's not as simple.
It's actually quite confusing, to be honest.
It's complicated. It can be complicated.
Yeah.
But it's complicated for a good reason, and it's got to be done right. And I think that's the key to understanding whether your property is suited to an auction process, because not all are. So, but if you're interested in thinking about that, tune in.
Yeah, tune in next Tuesday at 11 o'clock.
I'm ready to talk about it now. If you want
I
to.
was going to say, we need to stop you. All right, guys. Thanks so much. And
thank you, Matt.
Have a great day.
Thanks, guys.
See you. Bye.
See ya. Bye.